Thanks for joining us here on this lovely Tuesday afternoon. If it's still cold here in Wisconsin, that's true. But let me start by saying today is not about turning you into an accountant or a numbers nerd. As much as I am some of those things sometimes, I don't want you to be them. But it's really all about making you feel confident and a lot less stressed about the money side of managing your business or working with other people who have a business. And I'm going to share, as we get through this, the three financial truths that I learned over decades of financial leadership, working with big companies, small companies, and a lot of business owners who never planned on becoming a CFO, but here they are. You know, before we really jump into the content, I want to share a little bit about me. I'm a fractional CFO and the owner of Data to Profit. I spent years in finance and accounting with Procter & Gamble and Grande Cheese before opening up my own business to start working with small nonprofits and small businesses. And every day, just like you, I sit on both sides of the table. As a service provider, I'm offering my expertise. As an owner, I buy services I finally realize that I need or accept that I need. And over the years, I've made my share of costly mistakes in hiring people to try to get the help that I need. Looking back, I realized it's because I really did not understand what to expect, because I didn't understand the foundation in those areas like marketing and coaching. And so that's really the focal point here is to provide a foundation. Admitting that you need help can be scary, but then when it comes to your numbers, I truly believe and actually have, dare say, do I even dare say this out loud? We can have a lot of fun with numbers because it really brings us into the very first question. When you are a business owner and you hear numbers in your business, how do you feel? Are you overwhelmed, anxious, lacking confidence? Chime in. Anyone got thoughts as to how do numbers in your business make you feel?
All I do is numbers all day. It's what I
Okay,
do.
okay, so you obviously love them. That's a beautiful thing. Well, for most people, numbers don't make them feel calm, and that's okay. It doesn't mean that there's a problem or something's broken. Most people have just never really been taught what it takes to manage your numbers and actually use them to make better decisions. But here's the irony for all of you people who say that you're not numbers persons, you use them every single day. This is just a snapshot from last Sunday from weather.com. And in this one little picture, we know what time the forecast is for. You know the temperature, what it's going to be. You know it's a wintry mix or a light snow's coming your way. You've got the humidity at an X%. You got a little graph at the top to show you what really is going on. Just one simple example. But you want to be on time? Don't want to be late? You're looking at your watch. When you go to the grocery store, is something too expensive for you to buy? It's by that number on the price. Are the prices going up or are they going down? Are you healthy? When you go to the doctor, first thing they test is your blood pressure, your oxygen, your pulse. Are you counting your steps and your calories? All those things are numbers that are helping somebody assess, make decisions about what they should be doing next. And you took that wonderful vacation, and after it's all over, did that amazing that you have cost more or less than you thought it was going to? Can you avoid it, or did you take on debt? These are all questions that we ask, and why you go to the all-inclusive so you know that number so you're not surprised at the end of it. Even when doing something like making cookies, the oven goes on to 350 degrees, and you set the timer for 11 minutes, not 8 minutes, not 15 minutes, 11. Why? Because that's where you know you're going to get the optimum outcome. And are you ignoring your numbers? Yes, sometimes when we're doing that 75 into 55, it becomes quite the unanticipated cost. So again, every day we're living our lives trusting the numbers. So they come so natural to us in our daily lives. Why are they terrifying in our business? And really, the difference between your business numbers and your personal numbers is the business numbers can make you feel like a judgment, like a failure, like it's something you're supposed to know, but you don't understand. And why does that happen? Because if we're afraid of what they're going to reveal, we lose confidence in ourselves, and then we continue to avoid the numbers. So numbers are not just things that you look at. So when it comes to your business, we'd like to reframe. What are numbers? They are not your enemy. They are your help. After all, they do a lot of really cool things. And if one of my favorite one that I love to teach people is that they reflect the behaviors and decisions taken by your customers, your suppliers, and your team. Everything comes down to this behaviors and decisions. Customers buy, the money comes in. Customers, so someone didn't cancel a subscription, money's going out. Numbers can really align people to the goals and how you're doing against them. So this alignment is what your team says, hey, if you think this is our goal is to get sales up to $1,500 a day, you're telling people what's important. And you're knowing that are you hitting that $1,500 or are you not? Then they come from and numbers also then come from what physically happened. You sold 3 websites at $3,000. Your sales are $9,000. If not, it wasn't $9,000 because that's what accounting reported to you. That's what physically took place. And and as you're watching these numbers and their trends and you're reflecting on, they really do reflect on what you could do, what you should start doing, stop doing, or continuing to do. So they advise you when something needs to change. And because they're really about what happened, they can take a lot of emotions out of some challenging conversations. When you say, look, you've missed, you did these 15 things incorrectly, it's hard for someone to say, well, it wasn't a lot. No, it was 15. They become very facts that you can make decisions and agreements on. But what's cool about them, in as much as they can take emotions out of disagreements, when you start saying, hey, our goal was $1,500 and you're now hitting $2,000 a day, you can celebrate the wins. And that's sometimes that we as business owners just take for granted. We don't stop and celebrate all the success that we have. Numbers give you a way to do that. So why do we avoid numbers? It's not that I hear this all the time. I'm not a numbers person. I can trust my gut. I will never tell anybody not to trust their gut. But I will also say, like Ronald Reagan said many, many years ago, trust but verify. We can't trust our numbers because our data is not good. Okay, well, your data is not good because you're not using it. And if you're not using it, there's no incentive for anybody to make it better. I often hear that I've been successful so far. But and even if I don't look at them, somebody has my back. And I love to just say, okay, who is that person that has your back? Because if you don't know your numbers, nobody else is ever going to care as much as you do. Accounting is not complicated once you get the basics. And I have no idea where to start. Well, you're starting here today, because this is what we're going to be talking about. How do we stop avoiding our numbers, which also happens to be the name of the book that I've got coming out in March. So let's keep going. But any questions thus far about anything we've talked about? Okay.
I think numbers are interesting because it comes down so much to our perception. Some numbers could be bad for somebody, it could be good for someone else, depending on their perception of them.
Yeah, actually, yeah. And even the numbers themselves, they can be very emotional.
Mm-hmm.
Like when you're writing that check out because somebody messed something up and you got to pay a lawyer because something's gone wrong. I feel bad about writing that check because I know it's something that I probably could have prevented. But then when like you're writing that bonus out to somebody, or you're buying a service from somebody that is actually delivering, it actually, like, I feel good about that because I know that the investment in my business is paying off. So that's a different emotionality that comes into numbers that is, to me, is just fascinating in how they affect your behavior and what you think and what you believe. Yeah.
Sure.
Thanks for the thought. But it's because I really think about numbers and data in this very, very simple model. And confidence does not come from guessing. That's if you're not using your data, you're basically guessing and going on your feelings about what the numbers might represent. But the confidence comes from numbers, which is information in the forms of your KPIs, your financial statements. All these things come into numbers, but it all starts with the data. And the data has to be correct for the decisions that you make from it. In fact, I tell people data is like a diamond. It's got 4 C's. It's got to be current, complete, clear, and correct. And if it's missing one of those things, it's not going to be right. For example, if my home address is 1904 Brooks Court, if I don't give anybody the city and the state and the zip, that's incomplete. If I accidentally tell you my address is 1940, it's not going to be correct. If I tell you my address was 794, that was from many, many years ago, so it's not even current. So this is like the diamond, the quality of your data. Once the diamond is quality data, the numbers are going to be good, representative of what you expect. And when those two things happen, that's where you get the confidence from. Make sense? Okay. So the reality is, whether you like it or whether you ever look at it or not, your business is giving you a lot of extra information to work with, and you're creating more every single day. I know some people on this call that I've worked with, yes, she looks at her numbers every single day. And it's about overtime. It's about hours that are worked. It's about sales during day parts and things like that. There is so much there that's available to you. And I know that everybody works with some portion of their data, and because they have to. It's not like we're avoiding everything, but it seems like when you finally put the dollars and cents, those are the ones that people tend to not enjoy as much. So this is where the insight starts, when the data turns into actual numbers. And to use them, you need a context. Every measure, every financial report needs to be compared to something. Very, very simple example. If I looked at you and said, hey, Sally, you made $1 million last year, how would you feel? Everybody I assume, that would be great. I wish I could make $1 million last year. But then I asked the question, just one more question. Well, what if you reasonably thought that you were going to make 2 million? All of a sudden, $1 million is really, really crappy because of and the only difference between those two scenarios from the high and the low is one word, an expectation. If I expected to achieve this certain level and I'm not, oh, I feel like a failure. And if I do that month after month after month, guess what? I'm not going to like looking at my numbers anymore. But instead of sometimes thinking about how can they help me, we tend to avoid them. And so confidence, again, comes from knowledge. With the confidence, you will know exactly where your money goes. You know that you have enough cash in the bank to make payroll next month or next week or next quarter. You know what's going on in your business because of the physicality of what the numbers are reporting. And with that extra confidence, you are going to worry less and sleep better. And so this brings us to the 3 financial truths that every business owner must know. And number 1 is, the world of money management is way bigger than you probably think it is. If all you're doing is having your accountant look at your numbers, give you a report a couple months late, but you're monitoring your bank balance, and that's the extent of it, you're only seeing a very tiny slice of what you can, could, or should be doing to profitably manage your business. So we're going to be talking a lot more about this particular one again. Number 2, CFOs actually manage 2 different functions. One you probably have, one that you probably don't. And those 2 functions are accounting and finance. Too many people use these words interchangeably, but they are different skill sets, different mindsets, and they add value to your business in very different ways. But as a simple starting point, let's just separate the 2. Whoops. I'm sorry, I moved the slide too much. As a simple starting point, let's begin here. Accounting is about the past. Finance is about the future. And unfortunately, the one that the owners typically don't have is the future-looking one. And the third truth is ignoring your numbers is very expensive. Just as we saw with you ignored the speed limit and you got caught, you were expense. But at the end of the day, no business owner is ever surprised when you run out of cash. And in your numbers are missed opportunities, unclear profitability performance, stress, and all type of other hidden cost. Haven't raised prices as cost goes up? you're losing money. If your growth is coming from a low margin product or low margin customers, you have unprofitable sales. In that case, cash becomes even tighter, profits lower, even as sales are increasing. And there's probably customers that you ought to fire. And the biggest question that fractional CFOs get an awful lot is, hey, my accountant says I made $100,000. Where is it? Because it's never, ever in your bank account in the way that you think it should be. And if that sounds like you right now with the question that you have, just let me remind you, profit does not pay bills, cash does. So knowing where your cash is and where it's going and where, and how it's being used is something critical to you. And a couple questions. Do you know today what your tax bill is going to be in the next 2 or 3 months? Do you need to hire new employees now? And if so, how long is it going to take you to find them? And if you're thinking about buying new equipment for your business because you wanted to improve your productivity, can you afford that new equipment now? If you're not using your numbers, when you actually go to make these decisions, may not get the number that you want, and there's going to be an unfortunate surprise that you did not plan for. So with all that, this is where, all my CFO experience, writing the book and working with a coach really all came together, those financial truths. And why don't business owners hear about these? Here are my thoughts on this. Number one, there's just a lack of knowledge because generally the world teaches business owners that you have a bookkeeper, you have a tax preparer, you're covered. And that's largely a compliance issue. There's a general lack of awareness because, as I said before, accounting and finance are used interchangeably, but accounting is absolutely required. You must have an accountant because you must pay taxes because those are things that you are talking about. But nobody ever talks about finance because it's just this function that nobody's really aware of. And there also with that becomes a lack of access. Bookkeeping help is all around. You can find bookkeeping companies, accounting companies, CPA firms all over the place. Part-time CFOs can be expensive. And when you go to find a contract lower level finance person, they don't even exist. In fact, when I started my business long ago, I really thought that I was going to be the person who could work for CFOs as kind of the outsourced finance guy. And I talked to 2 different CPA companies down in Chicago. And I said, you have bookkeepers, accountants, senior accountants, controllers, CFOs. What you really need is somebody to help you with the finances and do the work of the finance person. And these 2 guys both looked at me and said, why do we need this? These were obviously CPAs who grew up to become CFOs, and the main focus on their work is all about making financial statements accurate, complete, and as best as they could, and fully compliant with GAAP. But they were really missing how do those statements actually help business owners run their business? Because accounting itself is not intended to actually help you run and manage your business. It reports what happened. Any thought about that?
Yeah, so you find that business owners commonly just assume that their bookkeeper is a finance person, that their bookkeeper is a financial advisor.
Mm-hmm. If they know what they should be doing.
Mm-hmm.
I mean, when I talk to people about what their bookkeeper actually does, even like rearranging a P&L so that your sales directly line up with your cost of sales, so you can look at product or customer profitability. And I spoke with someone and said, I've never had anybody talk to me about my business like this.
Mm-hmm.
Or think about the bookkeeper who does a great job classifying 60 different expense accounts, but they all are still printed out on the QuickBooks default of alphabetical order.
Mm-hmm.
How much are you spending in marketing? Let's see, I start with A for advertising. There's some printing cost. There's some discount cost or donation cost. Then I get into social media. Then I get into webinar or websites, and I have to manually add up 6 or 7 different lines to total up to advertising.
Mm-hmm.
Why not have your bookkeeper rearrange those, put them into groups? So instead of looking at 80 different lines, you're actually only looking at 10 to a group. Then when
Lynn,
you can do that, it's actually that person is actually being helpful to you and giving you a reasonable number, because there's absolutely nothing that you can look at with 80 lines and make any decisions.
Mhm.
But
Lynn,
it's amazing how often I see that.
one of the things that I run into quite a bit is I'll have conversations with business owners, and we'll talk about, running the books, keeping the books clean, who's doing your accounting, things like that. And a
Mhm.
question that I ask them is, when was the last time your accountant approached you with an idea on how to save money? And you just get blank stares.
Really?
And I don't want to, I'm not here to, belittle accountants. They're very good at what they do, but that's not really their job. That what you were talking about with a financial planner, that's the planner's job, not the accountant's job. So they really do work in tandem. And you're absolutely correct. We just don't get this information out. I recently got a CTBA, which is a Certified Tax and Business Advisor designation,
Mhm.
because of exactly what we're talking about right here, right now. And again, I mean, everybody needs the accountants. You need to keep your books straight, but you need to plan as well. And what you don't see is what's going to get you.
Mhm.
It's not what you do see, it's what you don't.
Absolutely. And that's where and the impact of this is all these hidden costs that are running into your business. You never really appreciate the inefficiencies or really understand what's going on. And if again, it really comes down to that accounting. When you think about your bookkeeper slash accountant, $50 to $80 an hour for those people. If you're looking for a CFO to help you fix your books, you are going to pay that $200 an hour or more. You can spend 3 months or 3 times as much fixing something that, had it been done correctly or helpfully in the beginning, is going to be a lot less expensive. And part of what I'm trying to do through this awareness campaign is really saying, let's get the right help, buy the right help that you need to solve the right problem the real problem that you have. If you want strategic advice of your business, find a CFO, fractional CFO, who actually has experience running the business, not just somebody who's been reporting their business. So this is it. I really appreciate that comment, Tim.
Mhm.
So,
I also,
go ahead.
go ahead, Clayton. I'm sorry.
Yeah, I was going to say, so that if you look on LinkedIn, there's a lot of CFOs that are there who share that they are both CFOs and bookkeeping.
Mhm.
And do they tend to keep those roles somewhat separate? I mean, are they bookkeepers who are claiming to be CFOs, but maybe are really bookkeepers? Or do they really have the CFO extra level of expertise of looking ahead with those numbers?
I'm going to go out on a limb and say there's a lot of people who are just doing that. There are a lot of very, very good bookkeepers who spend a lot of time. There's a couple that I can recommend that I know take the extra time to work with their clients.
Mm-hmm.
But then when you think about it, you need a license to cut somebody's hair. I don't have that problem because I don't have any hair, but somebody needs a license to do that. Nobody needs a license to become a bookkeeper.
Mm-hmm.
And so they're doing QuickBooks Online, they're doing the courses, and again, they're providing the service, but what you need is something a little bit more. And when you hear and I would look then at the rate that someone's charging for your bookkeeping, because if you're being charged CFO rates and getting bookkeeping work done on a regular basis, that's probably not a great idea.
Yep.
Right. And I would also add to that too, because I work with a lot of exit planners and
Mhm.
business valuation specialists, and they look at the numbers very, very differently. So if the bookkeeping isn't, I think there's a sweet spot, and correct me, Lynn, if you agree or disagree. I think there's a sweet spot between how granular your books need to be for evaluation,
Mhm.
versus, what you need to see them for tax strategy and day-to-day operations and cost savings and those types of things. So I think there's a sweet spot when you set up the bookkeeping and the chart of accounts and how granular they need to be for that purpose. And a lot of bookkeepers don't understand. So I think it depends on your goal.
Mhm.
And I think it depends when you ask a bookkeeper about their expertise, how granular will they go? And do they understand what a business needs? Because If you're a C Corp, you might have to do valuations every so often
Mhm.
versus an S Corp that may not have to, or an LLC that may not have to. So I'm just going to put that in as a caveat, I think, to
Yeah.
looking for the best bookkeeping fit for your business.
Yeah, and when you think about it, the IRS does not like miscellaneous expenses.
Mhm.
So when you try to put when you got $20,000 of miscellaneous, a good tax person is going to say, break this out, give me some idea because it needs to go on another line because big buckets like that. And again, these are the things that a bookkeeper may not think about. It may be fine for you to have $50,000 in office supplies. But when you get that, office supplies includes everything from subscriptions to
Mhm.
your to your Hulu subscription, to your printing and all that kind of stuff. But again, if you want to know what's in there, you spend a lot more time going through a big pile of trash, trying to separate it into usable buckets and understand what's there, versus maybe having that $50,000 broken out into 7 different accounts, and
Mhm.
each one actually represents something that it's easier to do. I'm a big believer in doing work at a more granular level, perhaps than other people, because it's always easier to roll things up than it is to disaggregate them into the original components. Yeah. I see. This is the cool thing. Nobody ever talks about chart of accounts either. That's not in this conversation at all. But they are so critical because one mismatching on your chart of accounts, your bookkeeper sends it to your tax person. They assume that it's going to the right place. The next thing you know, your taxes are messed up because of the way something was classified. Happens more often than we think. But in all of this, after we talked about, if you're not looking at your numbers, you don't have somebody, congratulations, you are the CFO of your business. And that's the reality check. Because then what happens is, as an inexperienced and sometimes untrained CFO, there's a few mistakes that you might be making. One is confusing activity with performance. People are coming into the restaurant, but is it profitable activity? Are you getting as much profit from them as you can? And that's the difference of employee training. If you got someone said, would you like, want any dessert? No, they don't really care. They're not going to buy a dessert from you. But we all know that server who came up to us and said, I know you guys are stuffed. Our chocolate cake tonight is to die for. Why don't you split a piece? You'll look at your wife, you look at your husband, and you'll say, yeah, okay, and throw on 2 coffees or 2 other drinks. Next thing you know, your bill in the tip has gone up another $20. It's a beautiful thing. Getting reports that you don't understand without questioning them is a missed opportunity to learn. Because again, why do you not do that? Well, after 14 years of running my business, I should understand these things. Sometimes it's much easier just to kind of get them, look at them, and be done with them. The other thing that we often have a tendency to do is set arbitrary goals. Like, I want sales to grow 15%. Great. What are you going to do differently this year than you did last year, or the year before, or the year before when sales were only 2%? You have to decide what you're going to do differently. What assumptions are you going to make? And if you don't know where all your money goes, or if no one's ever explained it to you, that's one of the criteria that I would say with your bookkeeper, your accountant, it's almost financial negligence, because you're coming in of money and the flowing out, that is what your business is all about. And if you don't understand where your money goes, that's something, it's time to get a new advisor. And not knowing the true profitability of what you're selling kind of goes along the same way, because it's real easy when prices, we saw prices go up so much over the past 5 years. Have you really raised your price probably twice a year like you should have? And I know somebody who, that I worked with, and we looked at, all of her coffee shop prices and her ice cream prices. And she says, I hate to do this, but I have my costs have to go up at least 10%. I say, yeah, I mean, the price of cocoa has just gone through the nuts, or gone through the roof. You cannot not raise prices when your costs are going up. And again, it's something that we don't feel like we can always charge as much as we should. So these 5 things happen, I see over and over again, but there's actually a bonus. You're spending 95% of your time in the past. Think about your business as like riding a bike in heavy traffic. You're pedaling down the street as fast as you can, looking for oncoming traffic, and you're looking for potholes and stray children crossing the street. How often are you looking over your shoulder? Not too often. And if you don't have a finance view and your view is only accounting, that's what you're seeing is the past. You're only looking backwards. Now, I know there's just a whole lot of words that I just tossed in there from the 3 financial truths to the 5 mistakes and the bonuses and all that. And I hear you probably saying, yes, this sounds good, but I really don't have a good picture to kind of show me what this all really means. How can this help? So what I'm going to try to do is put this picture and kind of take you on a real quick tour of what smart money management in its entirety looks like. This is it. We all recognize the Earth, and we're going to turn the Earth into that traditional 4 box. In the South Pole, we have accounting transactions. That's the lowest level of detail that we were talking about, those individual activities that get recorded. On the opposite end, in the North, in the North Pole, financial strategy. This is the big picture. How's my business performing? What do I want it to do? What are the results going to be? And what can I expect in particularly my exit, long-term planning for my exit strategy, or even just how am I going to manage my money over the next 3 or 4 years? The past is way over in the West and the future is in the East. Okay, that's the grounding. Unfortunately, we find that most small business owners live here in the past. They're focused more on the accounting activity, which by definition is backwards looking. Where do we want you to be? Up in the Northeast, and again, in the traditional 4 box, you always want to be heading northeast. But this is where we should live. We want you to think about the future and about your financial strategy. How are you going to achieve the results that you have? What do you want your business to sell for? When do you want to exit? How do you bring in new partners or more people and investments? This is all the forward-looking stuff that's more the realm of finance. And then when you look at the people who perform these services, where do they live in the world? Your bookkeeper and your accountant, they are the ones really living down here. Your tax preparer, the person who actually submits your taxes, that's a backward-looking activity. And your CPA tends to live in the same world. You up here as the owner, where we want you to be living. We want you to move from down here to up into the Northeast, where you're sitting up there with the CFO, someone's helping you manage financial strategy, with your wealth manager, with your tax planner. The tax planner is having conversations with you about where your business is going. When should you move from that LLC to the S Corp to the C Corp and go through all those changes, giving you forward-looking tax advice that's going to help you personally. And this is where they live. So this is almost like the best way that I can visually describe the difference between finance and accounting. Another way of looking at this is what activities happen by these people. The bookkeeper does the bookkeeping. They reconcile. We manage payroll, employee plannings. We make sure the accounting's right. We prepare and review financial statements. We file taxes. All this stuff is absolutely critical and must be right before the work of the finance people, because otherwise you get that garbage in, garbage out. So, when I compare and contrast finance and accounting, it's not that one's is more valuable than the other. You absolutely need both. Because what's happening over here in the finance world is strategic planning, profit and cash forecasting. If your business is tight, you want to know what's going to come up over the next 13, 14 weeks. Business analysis. Am I looking at overtime? Am I trending things? Am I trying to figure out why did this happen for you? How can we save money with expense management? What do we need to raise prices to? And tax planning, working to see how can I actually save money next year and build personal wealth. I worked with a small landscaping company a couple of years ago. They bought 5 brand new trucks every year for 5 years. And you figure about $60,000 for a nice pickup truck. And I said, why do you guys do this? The business hasn't grown that much to require a new truck. I said, well, our CPA said we could save some taxes because of the accelerated depreciation. Great, you know what acceleration and depreciation is, you know what it does, but you could have gotten that same deduction working with somebody who helps do wealth planning for you to say your business can offer a profit sharing plan, a 401k plan. You're putting money in your employees' pockets as well as your own. You put that into the market, and instead of having, you know, five fully depreciated trucks, you actually have a pretty good start to building personal wealth.
Hey,
And
Lynn,
that's the difference between a planner and a filer. Yes.
question for you. Were they trying to do something like a leveraged equipment lease, take the full depreciation and then lease out the equipment to
Well,
other interested parties,
no,
or
they would
what
sell
were
the
they
truck they
trying to do?
had and use the new one.
Oh, that's half a plan.
Yeah, and not a very good one, in
No,
my opinion.
no.
And but
Okay.
again, but this is knowing, like what type of person you're dealing with, and is someone looking forward with you instead of just saying, okay, how can I do it this year? Back in October, I attended a conference here in the Milwaukee area, and part of a panel discussion involved a bookkeeper, a a tax planner, and a banker. And both the bookkeeper and the tax person said, hey, we can help you minimize your taxes, and offered, lots of ideas for that. But then the banker came in and said, hey, yes, you can do those things. But if you come to me for a loan after lowering your taxes so much, means you've lowered your profitability as much, which means you've lowered your cash flow as much, you're not going to get a loan. And then then the moderator said, well, that's why you should talk to everybody on this panel. And I'm like screaming in the back. I said, no, you need to talk to a CFO like me.
Right. Yeah, it's too many cooks in the kitchen sometimes.
Yes. And
Well,
and all these cooks, and this is the other thing about what a CFO does. The CFO really is the captain of the entire money management team, because you get a slice of cherry pie from the bookkeeper. The tax preparer gives you a slice of peach pie. You get chocolate and coconut cream from your expense manager, and somebody else is going to give you a different slice of pie. How do you know who's the referee? It's got to be someone who has experience looking at the whole world of money management and trying to make the best decision for you for what you want to achieve.
and to put that into kind of a personal perspective, years ago I was talking with someone who wrote mortgages, and I think the question came up in our little group was, if I don't have any, if I don't have any credit cards and I'm cash and I've got cash and I don't have credit cards, can I apply for a mortgage? And the banker went, that scares us because we don't have a history on you to know that you can actually manage and manage credit. And so it's kind of the same thing, right? I mean, you
Yeah.
have to be able to almost prove that you can do certain things in your business for certain purposes, and it's a balancing act, very,
Yes.
very much so.
There's lots of balancing acts.
Mhm.
One more slide on finance and accounting. There's a lot of different ways that you can do this, and I like to use different things from the world picture to even a simple chart like this. But just to really explain accounting versus finance, this is a simple thing for everybody. Accounting begins with the letter A. It's a go. There's nothing you can do about it. Finance is all about your future. It's a forecast of your potential fortune, your potential failure. And what I left off here is when you're up at 2 o'clock at night, it's where your fears are. Accounting tells you what happened. Finance goes in and says, so what? Why did this happen? And do I care about it? And more importantly, finance begin to say, okay, now that we know this gave us this result, what do we need to do about it? And then skipping all the way down to the other areas that often don't get a lot of direct conversation and in messaging like this. The accountant is tracking your receivables, your payables, your asset tracking, which is very, very important, particularly if you have a lot of, heavy duty equipment and things like that. Taxes, audit, banking. Finance does all that customer and product profitability, customer analysis, return on investment analysis for when, money that you're going to want to spend in new products or people, and new product evaluation. So these are all just different ways of looking at the two different functions, the value that they provide, and looking at this gap that these three truths and all this awareness creates. It's why I created a brand new service, and I'd like you to think about it as a test drive a CFO experience. And this new service is Guided Money Tours. It's a unique financial management experience designed specifically for businesses that don't have, a CFO or somebody that's bridging that gap between what big businesses do every single day and what small businesses never hear about. And what are our goals in this? I want to make sure that people can begin to see the warnings and the wins in their numbers. And I believe that a little awareness can go a long way. And the other thing we want to do is help you make better financial decisions more confidently. That's going to help you grow your business. And with that, if those are our objectives, the promises that I can make, you go through this, you will look at your numbers in a very, very different way. We're going to make sure that your financial statements are clear. You know what to do with them to help you keep more money. And you're not going to ever be able to say, man, I wish somebody had told me this earlier, which is sometimes the phrases that I hear over and over again. Are you going to be an expert after this? Absolutely not. But you will be more aware so that when you go to get additional ongoing help, you'll have a base that you can continue learning from. Real quick, a tour of Guided Money Tours. Tour number 1 lasts 1 hour. The world of smart money management, people on your team, what they do and don't do. Think of it as a much deeper dive into the world tour that we took before. Tour number 2 is a 3-year review of your financial statements. We're going to walk through and show you how money comes in and flows across those statements, what you should do with them every day. But the real value beyond the education is you're going to get 10 to 15 things through the eyes of a CFO that you can start doing today with your business to help you get, to make more money and keep more of it. And tour number 3, again, another 2-hour session. We're going to establish goals for your business. I'm not going to create them. You are. But I will create a 2-year forecast for you and then teach you how to manage your actuals against that forecast. And over time, we want to change your perspective from the past to the future. So that's Guided Money Tours. These are the 3 financial truths. Thank you so much for dropping in here. I'd love to get your feedback. So if you could drop anything in the chat, love to connect. Look forward to continuing the conversation. Next month's event is going to be called The Physicality of Forecasting. Again, a completely different way of looking at what a forecast is and how you should use it. But before we sign off, are there any other questions that we might be able to, or any other thoughts that you want to share at this point?
Yeah, there's some great insights there, Lynn. And at one time, you and I had talked that you are kind of like a precursor to a CFO in a sense, right? For somebody who's looking, maybe not sure if they need that level yet, and you come in and kind of educate.
Yeah, that's a lot of what I've done. So if a business, so typically, a smaller business is going to start with a fractional CFO. Once you decide you need one, you start with a fractional, and then as your business continues to grow, then you're going to hire that person who, quite honestly, is going to cost $180,000 to $200,000 in many situations. So it's an easy way for a person to get additional expertise. And the fractional CFO world is just like the rest of the fractional world, where you got fractional technology officers, fractional marketing people, fractional salespeople, chief fractional operating officers. And so it's just a great way to get that kind of insight and help for your business without actually taking on that full-time cost. Yeah. All right, then. Well, again, thanks everybody for coming today. Really appreciate it. And we'll see you next month.
Thanks, Lynn. Really good.
Right. So, yeah, so
So Lynn, quick question for you.
Yeah.
What's the update on the book? It's March now for your book?
The update is going to be toward the end of March.
Okay.
And actually we just put together the first the kind of like the first view that people can request. It's going to be coming out in the next couple of days, where you'll get the back cover, the intro to part one and the very first chapter, and then the back cover. And I think
Okay.
that'll give you a pretty good idea of what the book, the tone of the book, what we're going to cover. And it really starts with, why are you in business? Set a
Mhm.
vision. And, yes, the visions are all that foo-foo stuff, but it's something that's you got to have the vision, an idea of where you're going before you can figure out how you're going to get there.
Yeah, absolutely. Absolutely. Well, I'm
Yeah.
excited for it.
Yeah,
So,
we just hired a publicist. We just hired another marketing person,
oh,
and
good.
all that's getting underway, because we
Oh,
really think that. And so really what I talked about guided money tours, it's really, you take the content of the book and you put it
mhm.
in action in a very, very short amount of time.
Yeah, I'm excited for that and would love to talk to you about putting that somehow into my community for my business owners.
I
So keep me posted.
I would love to do that. And yeah, and so we're actually, looking for different podcasts to be part of,
Oh, great.
either
Let me,
individually or together. It's,
okay.
people,
Let me connect you. Yeah, let me connect you with some folks. Okay.
that would
Great.
be
Good to
great.
know. That good
Right.
to know. All
Thank
right.
you,
Well,
everybody. Hey,
good to meet
thanks.
everyone.